Investor poll shows carney increasing rates in 2015, UK. Credit, Bloomberg. Bloomberg.com. BusinessWeek.com. Bloomberg TV. Premium. Professional products. Bloomberg Anywhere. Bloomberg Tradebook. Industry products. Bloomberg Briefs. Bloomberg Government. Bloomberg Law. Bloomberg BNA. Bloomberg New Energy Finance. Bloomberg Sports. Enterprise Products Compliance Solutions. Data Solutions. Technology Solutions. Trading Solutions. This site uses cookies. By continuing to browse the site, you are agreeing to our use of cookies. X. Market Snapshot US. Europe. Asia. Ticker volume price delta DJI 15300.60 negative 25.96 negative 0.17% SM page 501683.42 negative 5.71 negative 0.34% NASDAQ 3715.97 negative 9.04 negative 0.24%. Ticker volume price delta S0XX 52861.6 for negative 0.43 negative 0.02% FTSE 106577.16 negative 11.8 to negative 0.18% DAX 8507.33 plus 13.33 0.16%. Ticker volume price delta Nikkei 14404.70 plus 17.40 0.12% Hang Seng 22915.30 negative 38.4 for negative 0.17% SM page /ADX 205219.63 negative 22.91 negative 0.44%. Bloomberg. Our company. Professional. Anywhere. Home. Quick. News. Opinion. Markup data. Personal finance. Tech. Politics. Sustainability. Luxury. TV. Video. Radio. Federal message muddled as taper meets slowing growth. 750. Hank Paulson, Financial Crisis 100-Year Storm. Wildcatter Hunch unbox $1.5 trillion oil offshore U.S. Texans in dark on Obamacare as enrollment looms. 11. Lehman's cold, dead hand grasps for money. 144. Dressing the man, Paul Smith's classic checklist. Investor poll shows carney increasing rates in 2015, UK. Credit. By Simon Kennedy, 2013-09-13 T12:06:05Z. International investors added their voice to those predicting the Bank of England will be forced to increase interest rates earlier than Governor Mark Carney is projecting, according to the latest Bloomberg Global poll. Almost a third of the investors, analysts and traders surveyed said the UK central bank will boost its benchmark rate from 0.5% in the first half of 2015, and more than two-thirds predict an increase between now and the end of that year. That conflicts with Carney's message that officials can wait until the end of 2016 as they pledge not to even consider acting before unemployment falls to 7%. Financial markets are focusing less on his words and more on reports that show the economic recovery picking up steam. Gilt yields and the pound have risen since Carney unveiled his forward guidance policy on August 7. 10-year yields are at their highest relative to 2-year notes in more than 2 years as investors demand more income to hold bonds for longer periods. Guidance has its limits, said Marie Owens-Thompson, the poll respondent and chief economist at Crédit Agricole Private Banking in Geneva. Market participants think that growth in the UK is having a bigger impact on the labour market and expect the unemployment rate to drop faster than the bank. Carney argues forward guidance is helping to secure the economic recovery by persuading consumers and companies that they can spend without fear of borrowing costs rising in the next 3 years. Recovery signs. Data this week showed a house price gauge produced by the Royal Institution of Chartered Surveyors rising to the highest level in almost 7 years in August. Unemployment declining to 7.7% between May and July from 7.8%. And construction orders surging almost 20% in the second quarter, boosted by demand for new housing, wind turbines and solar farms. The implied yield on the short sterling contract expiring in December 2015 has risen 65 basis points since August,